You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to watching the Financial Survival Network. I'm Kerry Lutz. Well, Ukraine, what is the true story? You know, they often say the first casualty of war is truth. Hey, the first casualty of government is also truth. So when you have governments fighting wars, you can't believe anyone. The one thing you do know is that the war continues on. Me personally, if you like my view, you probably are curious why there wasn't a Russian flag planted in Kiev on the second day of the war, but we are where we are. Andy Schectman's with us to talk about the impact, what's going on in the metals markets, what's going on at milesfranklin.com, and what else we can expect. Andy, welcome back. Well, one thing I just want to say, we got like $1,100+ platinum. We haven't seen platinum do anything meaningful literally for years, although recently it's gone back over $1,000 an ounce.
Yeah, well, you know, look at the price of palladium. Let me check. I haven't looked at it today. Maybe you're looking at it. Yeah, so you have the majority of all the platinum and palladium in the world coming out of Russia, first and foremost. And so from a standpoint of price appreciation, it's certainly a function of what's going on in Russia as supply is not going to come out of there anytime soon. I think that when we look at what's going on and the sanctions that have been placed on Russia, I think it's important to understand that if we in the West feel that by inflicting these sanctions upon Russia are not going to have some sort of a negative impact here in the U.S., I think you should believe in fairy tales and unicorns, because I think it's a big issue, actually. I think that the law of unintended consequences is going to come into play here very quickly. Let me explain. First and foremost, I think it's a given that most people would agree the U.S. isn't going to slow down their printing of money anytime soon for, you know, all of the ambitions that we have, from entitlements to wars to any of the myriad of monetary follies that the Fed has embarked upon over the past few years. Money creation is never ending in this country. It will continue. And when you realize that by lopping off a good portion of the demand for the dollar, by cutting the Russians out of the SWIFT system, will have unintended consequences. And in the respect that you don't have to be an econ major to realize that if you produce more and more and more of something and you start to minimize the demand or take off a good portion of that demand, in this case, more being produced, less demand in anything, you're talking about a falling price. So when we look at the value of the dollar being created with less demand, you're looking at a falling dollar, which unintended consequences being you will have to see rates rise in order to compensate for the loss of purchasing power. And I think it's going to get to the point where the Fed won't be able to be the backstop that comes in and continues to buy the dollar and to buy the U.S. treasuries to continue to push interest rates up. In other words, and continue to push interest rates down. We are in a situation where we're damned if we do and we're damned if we don't. And I think that, you know, you have a bunch of politicians making these decisions, not economists, and those sanctions are going to have, I think, reverberating effects across the board, not just rising oil prices. I see that in California, gasoline's over $7 a gallon right now. Get ready for more of that across the entire country. But what I will say to you is that what you're going to see is a continuing debasement of the dollar and a falling of the dollar in its relation to other things, in particular, gold and silver. So, yeah, I think that what's happened in Ukraine obviously is horrible. But from a standpoint of how it affects the precious metals market and the dollar, I think the consequences are going to be a lot worse than people really think.
Hey, and let's go back to World War II. One of the major reasons why Japan attacked Pearl Harbor was because of the United States trade embargo on Japan, particularly for scrap steel. And they viewed it as an act of war, and they attacked the U.S. Now, do I think Russia is going to attack the U.S. this time? No. But as we know from history, each war sets the clock running and the issues for the next war. That's what wars do. They don't necessarily solve any issues until there's out and out defeat of one of the sides, but they do bring up the rationale, create the rationale and the circumstances for the next war, which potentially could be a lot worse than just going after the Ukraine.
Yeah, I think that the next war will be fought over the U.S. dollar. Look, you keep hearing that Russia and China are closely aligned, and even through all of this conflict. So let's think about that for a minute. First of all, Russia and China created what's called the CIPS system, CIPS, the Cross Interbank Payment System. That mirrors the SWIFT system. In fact, even you're seeing politicians in the Eurozone calling for something similar to this in an effort to reduce dollar hegemony across the globe. But let's focus on Russia and China for a moment. They're partners in the BRICS nations, Brazil, Russia, China, India, South Africa. And let's just take a look at the pieces that have been put in place. Number one, a few years ago, CIPS, Cross Interbank Payment System, mirrors the SWIFT system. Prior to that, they had the Chinese petro-yuan bond, right? This sidesteps the petrodollar. This sidesteps settling energy only in dollars. The Chinese petro-yuan bond is what China will use to buy natural gas from Russia or oil from Iran, and they will pay in this bond that is immediately convertible into gold on the Shanghai Gold Exchange. There's the third peg. Shanghai Gold Exchange would usurp the COMEX market. It's a more accurate reflection, and this is why we've seen 90 times more gold delivered off the Shanghai Gold Exchange than off the COMEX. So the pieces are in place. The SIPs to sidestep the SWIFT, the petro-yuan bond, a first step in alienating the U.S. dollar as the sole settlement vehicle for energy. And the third is the Shanghai Gold Exchange to usurp commodity settlement that happens on the COMEX market. And then lastly, we've talked at length about the Chinese Belt Road and Rail Initiative, where they are connecting Asia and Africa and what is the most ambitious, that being China, the most ambitious infrastructure project in human history. 75% of human population is being connected by China using the Chinese digital yuan for the majority of the settlement. And so you are promoting and you are pushing these countries. You don't think that they're looking at Taiwan. They are pushing and promoting these countries into moving away from dollar hegemony, moving away from the dollar and into their own new system that will employ the SIPs and the petro-yuan bond, or perhaps the fact that Russia signed a joint military cooperation agreement with Saudi Arabia and Nigeria, one step closer to removing the dollar as it's for the sole clearing agent for oil, as it's been since 1974. All of these pieces are put into place, and pushing them out of the SWIFT system by a couple of politicians or by all the politicians screaming to do that, I think is going to have reverberations in the respect that it is going to push these countries away from the dollar faster. It's going to hasten the demise of the dollar, in my opinion. Now, there have been people out there like Luke Gorman, I believe his name, who came out and talked about Russia possibly backing their dollar or their ruble with gold. There have been rumors about that, and or accepting oil in gold. And if they said, we're only going to take our oil, this is the largest exporter of oil in the world, that is Russia. And if they said, we're only going to take physical gold bullion for our oil, goes the price of gold. Any way you look at it, these things that are happening right now only exacerbate what is already a weak dollar and a Federal Reserve that is out of options. The Fed came out there and said, yeah, well, even with all this, we're going to raise rates. We support a quarter rate hike, 25 basis point rate hike. I mean, what the hell is that? You got 8% inflation and 0 on the federal funds rate. If you raise interest rates by a quarter of a percent, 25 basis points, It's spitting in the ocean. It does no good at all. In fact, all it does to me is crystallize the fact that the Fed is neutered, that if they raise rates high enough to find equilibrium in the economy where rates and inflation meet, so that right now you have inflation up here and rates down here. So when you buy a bond, you're negative 6% in real terms, long before they could ever find equilibrium in the market at 8% interest, 8% inflation, which we've talked about before, excludes food, energy, and housing. As John Williams has told us a million times, inflation's at 15% right now. Prior to 1980, when they rearranged the metrics by which they calculate the CPI to accommodate this inflationary agenda that they have, they took many things out, and they have been ever since, so that inflation seems tamer than it is. At 8%, it's going to come in even higher on the next CPI figure, but call it 8%, and interest on the 10-year treasury at 2%, you're negative 6% yield. The Fed is screwed. And so, this only exacerbates the problem that we are in. And that is, on one hand, you have a Fed with out of control monetary inflation. On the other hand, you have markets that are out of control in valuations. And so if you try to get tough and raise rates, let alone of what the market is going to do to try to raise rates on their own, you end up blowing up the stock market, the bond market, and the real estate market. If not, you eviscerate the value of the dollar through continued debasement and inflation. And what's happening in the Ukraine is only going to make it worse by pushing demand away from the dollar, which is going to drop the value of the dollar even more, create more inflation. And God forbid you see China come out in conjunction with Russia and the other BRICS nations and issue a new currency, one that's perhaps gold-backed. Remember, tier one reserve by gold, backing what would be a new digital yuan, let's say, or a new digital BRICS currency, whatever it is. And all of a sudden you see massive divestiture of the dollar. Or OPEC come out and say, we're now going to issue oil and other currencies. You see massive divestiture of the dollar, and they all come flooding home at the worst possible time when we already see strong inflation. Kerry, I wish I had better news, more promising news. But while this, as you and I were talking off air, may not turn into World War III, shooting bullets, and God forbid nuclear warheads, what it could do is be the nuclear option for the US dollar, the beginning of the end for the dollar as the sole singular world reserve currency. And the law of unintended consequences has a lot to say about that, but I think we'll see that it's going to be a lot more severe in this country from a monetary standpoint, I think, than people are giving credibility to.
Oh, yeah. Well, the world financial system, the global financial system, was already sustained a number of shocks from the pandemic, which really put a lot of countries on the ropes and led to this recent round of inflation, which has the further effect of destabilizing countries whose residents, whose citizens are already spending disproportionately high amounts of their income on food. When you see wheat has gone up, every commodity is going up and up and up, and they'll hit new highs, then they'll pull back. In fact, the only commodities that haven't hit new highs recently is gold and silver, pretty much, right?
Don't just survive, thrive. The Financial Survival Network.
Goldterra Resource Corp is a gold exploration company that has assembled a highly prospective district-scale land position on the doorstep of the city of Yellowknife in Canada's Northwest Territories. Goldterra is currently focused on expanding and delineating gold resources at the company's Yellowknife City Gold Project, with a goal of discovering over 5 million ounces. With ready access to infrastructure and multiple high-grade gold discoveries, Goldterra is on track to re-establishing Yellowknife as one of the premier gold mining districts in Canada. Goldterra trades as YGT in Toronto and YGTFF on the OTC. For more information, go to goldterracorp.com. That's goldterracorp.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Yeah, well, that's because gold and silver aren't, to me, they're not commodities. That's one of the fallacies, that people look at them as a commodity. Yes, they're metal pulled out of the ground and mined like other commodities, but what they are is the canary in the gold mine. They are the kryptonite to the Western financial system. They are the antithesis of what it is to be invested in traditional assets. They are the antithesis to the dollar. They are the inverse of the dollar. And so when you see gold and silver fully express themselves, be careful what you wish for. That will be in the light of a massively declining dollar. Look, we're lied to constantly. They hold the price down considerably in order to make things seem better than they are. Bank of America, who's obviously on the dole with the U.S. government, has an 800 million ounce short position in silver. 2 days ago, Friday, 3 days ago, when the price was up 80 cents, that cost them $640 million just alone in an 80 cent increase in the price of silver. If it weren't for the short positions by 4 really crooked commercial banks, prices of gold and silver would be commensurate with all the other commodities that we're seeing in terms of their appreciation. In fact, they should be much, much higher. And if people really took a step back and realized that the dollar bills in our wallet are actually IOUs from an insolvent government running copious levels of inflation, they think twice about the way they look at gold and silver. And the bottom line is price is irrelevant, because the biggest money in the world does not factor into the equation price as they are accumulating. Maybe they do. That's why they hold it down. That's why the central and commercial banks are part and party to suppressing the price. But look at JP Morgan, even with being the kingpin and suppressing the price, they've amassed 1.1 billion ounces of silver and 40 million ounces of gold. So the big banks, the big central banks, they all know that the price is being held down, and they are using it to run cover to de-dollarize before the shit hits the fan. The big money wants to protect themselves before they let the public in on the party. And they realize the only way to do that without crowding themselves out of the trade is to continue suppressing the paper price with one hand and gobbling up the physicals with the other. The difference is, in all the years I've done this, and I've done this for 32 years, Kerry, I have never seen greater expansion of interest into alternatives to the dollar. For the very first time, it's getting to the point where I think, are going to have a hard time really holding it back. And I fall back on the same statement I say all the time. The only way you can successfully manipulate a market over time is to push it in the direction it is going, unless you want to get run over. And I think that's going to happen. It's the demand for physical metal, Kerry, it's unlike anything I can even try to explain. You'd have to spend a day with me and see what it's like. I get up at 7 a.m. and I'm on the phone nonstop all day long. And I own the company. My brokers are on even more than I am. All day, one after the other, after the other, after the other, after the other. And I can't catch up with 300-400 emails every day and 100 text messages and 70 phone calls. And that's just me. We've written over 400 or 500 orders already today, and the day's not over. It's a blessing. But what I'm getting at is that the demand the price is nowhere indicative of the demand for physical metal. And it's going to express itself. And an event like this, to me, will only again hasten the demise of the gold cartel, of the ability for them to hold the price down. And it's I think it's a lot closer than I've ever believed myself. I think it's a lot closer than people think. Look, just the other day, JP Morgan had to step in because they were this close to a force majeure, or a problem where there was more silver demanded on delivery than there was in the registered category on the COMEX. We're this close to this kind of problem happening where they have to pull silver out of their eligible account and throw it into the registered account so that they can make deliveries as there are large delivery requests month after month coming off of COMEX. So look, we're closer than we've ever been, but I think what's happening in the Ukraine is only going to, whether or not it ends tomorrow or not, is only going to focus people's, eyes on the fact that staying in dollars right now and in traditional assets is incredibly dangerous. And there are a million different trigger points everywhere that could really quickly spin this out of control. I really think I wished I believe like you do that we are really close to an end in what's happening in Ukraine. I don't think we are. I think this is going to get a lot worse before it gets better. I think Putin has got himself so entrenched, he has to finish this job. I don't think he can back out the way that it is right now. And I think he'd be a fool to go this far and not finish the job. And by the same token, you can argue he's a fool to have done what he's done. doesn't matter what you believe, but I think the end is not as close as people think. And with that comes greater sanctions and greater consequences. So I guess we'll have to see. But if nothing else, this should be a wake-up call to people to reevaluate their situation. Even the best laid plans for retirement and financial security need to be reevaluated from time to time. And I guess I'll just simply say this, no matter what, even if this wasn't part of the equation, I've been saying this before, if you are entirely in dollars and save entirely in dollars, you are destined to go broke mathematically. It's going to happen. And an event like what we're seeing here, I think only speeds up hastens the speed in which this happens, where the dollar really starts to lose value globally.
Hey, not even Florida real estate is safe, Andy, from this.
No, it's not. No, it's not. And as interest rates rise, real estate is going to take it on the chin, no question about it. Interest rates have to rise, Kerry. And that's the question. I mean, will they rise out of a force of nature like this, where the dollar just continues to lose value as we push so many people away from the dollar with our sanctions and the U.S. and their war machine and all of their entitlements? They're not going to stop printing money. So the further debasement of the currency has to lead to rising interest rates. And I think that comes when the bond market realizes the Fed, all they can do is talk. And, a quarter basis point, even a half basis point, who cares? You have to find equilibrium in the market. And the only way to do that is to raise it above the rates of inflation, or at least to the level of inflation. So at 8% inflation, you got to get rates up to 8%. And long before that happens, you eviscerate the three pillars of wealth in this country. That would kneecap the bond market to an 80% loss on bonds in circulation or more. It would destroy the stock market. And can you imagine what 10 or 11% on 30-year mortgages would do to the real estate market instead of 3 or 4%? It's over. So these are all real. Yeah, these are all real concerns, Kerry. They really are. They're real concerns that for the first time in my career, I think people have to take into account and not just gloss them over, because we're at a point right now where there's not a lot that the Fed can do to come in and rectify the situation.
Hey, can you imagine? Forget about all the markets. What about the derivatives markets? Man, seeing rates go up like that would be a huge disruption and cause a global meltdown of these interest rate swaps and all the CDSs and CDLs and whatever other, CDOs, whatever else there is out there. Well, buying gold, we've been telling you to do it for a long time as an insurance policy. Just remember, just like the insurance company won't let you insure your house once it's already on fire, finding gold once the economy is collapsing could be equally as difficult. Andy, just tell us how to connect with you and how to place our first order for gold with you.
And it will. By the way, I've been saying that for the last year and a half, and I get a lot of shit for that, Kerry. People say, he's talking this book. I can see it. I can find it. It's happening right now. Premiums, again, are way up. Silver Eagles are back above $9 an ounce. Everything is going up. You can't find junk silver to save your life right now. And when I talk about the market being defined by the inability to source product, I'm looking out 6 months, a year. It's getting exponentially harder. Honest to God, it is getting exponentially harder, exponentially faster than I even thought it would. For now, people can, we are building a new online site. It's not more than 45 days away. I'm hoping 30 days where people will be able to buy online from us. But right now, it's send an email to info@milesfranklin. That's info@milesfranklin.com. Put Kerry Lutz sent me or the Financial Survival Network in the subject line. We'll send a current inventory. Make sure your listeners get the best price in America. If you have questions directly for me, please send to Andy. I am more than happy to answer all the emails and do what we can to get metal in people's hands. But as God is my witness, this market will be defined. If we continue down this path and more people wake up, especially, before the markets start to tumble, and wake up to putting some money outside of traditional assets into precious metals, I swear to you, the biggest challenge people will have will be getting product. And it already is my biggest challenge and has been for a while as a business owner. Getting it is not easy, Kerry. So for now, info@Miles Franklin. We'll send you an inventory. We'll talk with your people. We'll answer your questions. We'll give them the best price. And hey, I appreciate being here. I have a feeling you and I will be together doing some shows more and more this year, because I think, as the Chinese say, may live in interesting times. And honest to God, I believe we ain't seen anything yet.
Yeah, I don't remember what Chinese year this is, but it was an interesting one. I'll look it up. I'll put it in the show notes.
It was the year of the rat, isn't it? Maybe the year of the rat. I'm not sure.
Well, let's see. We can look that up real quick. Chinese year, animals, 2022, year of the tiger. So, yeah, hey, Asian tiger, perhaps. Well, we will see. In any event, if you got a question for Andy, shoot me an email, kl@kerrylutz.com. Don't forget, sign up for your free newsletter, financialsurvivalnetwork.com. Andy, we'll talk to you again real soon.
Always good to see you, Kerry. I hope you stay well, brother, and I look forward to talking to you soon.
Likewise.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.